Greetings everybody, I hope that you guys are good. Let's now have a look at NASDAQ 100, and we are on the monthly chart as you guys can see. And the last time we spoke, I spoke about this candle over here, which is a bearish candlestick with a long lower wick, right? And that candlestick tells us that we have a lot of liquidity, or rather we had a lot of liquidity at that point. Hence we saw price coming down to this level to grab that liquidity, and we can see that the current month's candlestick is quite bullish, and it is also quite possible that we might see price push further up, right? From here, what I'm going to do is just head down to the weekly chart, and here we are on the weekly chart. On the weekly chart, the first thing that I can see is that we also have this candlestick over here. It is a bearish candlestick with a small body and a relatively long lower wick, right? So this candlestick tells us that, similar to that other candlestick that I showed you, we have a lot of liquidity at that point, and that liquidity needs to be grabbed by the market at one point or another. So as much as it seems as if the market is starting to become bullish, I believe that price at some point needs to head down to grab the liquidity at this point, and that is because liquidity is money that needs to be triggered by the market, right? Another thing that is also very much interesting or important is the fact that we have this candlestick over here. It is a bullish candlestick with a small body and a long upper wick, and it tells us that at this level where it ends, there's a lot of liquidity at that point, and I think that's probably why we saw price rushing up to this level. It's because, in my humble opinion, the market needed to grab that liquidity, because, as I've said, liquidity is money that needs to be triggered by the market. So I'll just mark that zone just to show you that indeed the market has triggered that level, right? Let's see, what else do we see, guys? Another thing that is also very much important is the fact that we have an overextended M structure at that point, which has a neckline at this point, right? And you guys know by now that whenever we have M structures, we want to see price break into the bottom side of that neckline and then heading back to the neckline to test it. And as you know, at that neckline is where we look for potential selling opportunities, as that neckline is a very strong area of resistance, right? So let me just add a neckline to that structure. Let's have a look. Let's see. So we can say that more or less this is the neckline of that M structure. And let me again utilize the Fibonacci retracement tool just to see if we have any key numbers that align with the tool. So let's have a look, and we can see that the neckline aligns with the 50% Fibonacci retracement level. I'm just going to delete this, right? So what this tells us is that as much as things look bullish at this point in time, we might potentially look for selling opportunities in and around this area over here, right? And that is because, number one, we have this M structure. Number two, we have the neckline of that M structure at this level. Number three, we have the neckline aligning with the 50% Fibonacci retracement level. And the last point is that, as I've said, guys, this is a very strong level of resistance, right? And we can see that we've had multiple rejections at that level, more or less, right? And in the future we might get another rejection. Anyway, let's proceed. So what I'm going to do here is head down to the daily chart, and here we are on the daily chart. Let me just fix my neckline. There we go, right? And just to recap a bit, remember, guys, that we spoke about we have this M structure over here. It's an overextended M structure, and it has a neckline at that point. And where we have this neckline, just also keep in mind that it is a very strong level of resistance, as we've had multiple rejections at that level in the past, as you guys can see, right? And it looks as though price is heading again to that level to test it, and at this level is where we will potentially look for further selling opportunities, right? Anyway, let's proceed. So now we're on the daily chart, as you guys can see, and the first thing that I'm going to do is to add my daily channel. Let's have a look. Daily channel. Here we go, more or less. There we go. We just need to ensure, as I say, that all our drawings are as perfect as possible. There we go. Right. So what else do we see, guys, in regards to the daily chart of NASDAQ 100? So guys, as much as we have this overextended M structure which has a neckline at this point, and I've said that at this point is where we should look for potential selling opportunities, can you guys also see that we have an inverted head and shoulders pattern at this point? However, the inverted head and shoulders pattern has a neckline at this level, but the neckline is yet to be broken. So ideally we would love to see price closing above the neckline of that pattern and then heading back to that pattern to test it, and at this point is where we would look for potential buying opportunities. However, having said that, just bear in mind that we said at this level is where we would be looking for potential selling opportunities, right? To add to that, keep in mind that we also have this channel, and we might possibly get a third touch at this point, in which case it would add as confirmation that indeed we should be looking for potential selling opportunities. However, we're gonna need further reasons and more confluence, right, before we make any selling decisions. Anyway, let's proceed. So what else do we see, guys? What else do we see in regards to the daily chart? On the daily chart, I can see that we also have another candlestick over here, which is a liquidity candlestick, right? So it actually makes sense why the market is pushing up, right? It's because there is a lot of money sitting at that level, and once that money has been triggered, we might then potentially see price move further down, right? So what I'm going to do now is head down to the H4 chart. On the H4 chart, I'm just going to fix my lines. Let's see. There we go, more or less. That should be fine, right? Let's have a look. So what do we see on the H4 chart? In fact, before we continue with the H4 chart, I'm just going to start off by adding my H4 channel as well. Let's have a look. How would I add my H4 channel in this regard? So I would do it in this manner. I would add my H4 channel in this manner. Just bear with me, guys, while I fix my channel. There we go. Right. So what else do we see in regards to the H4 chart, right? Just to recap again, remember on the bigger time frames we spoke about how we have number one, at this, or rather in this zone, we have this M structure which has a neckline at that point, right? Number two, we also spoke about how we have on the bigger time frames an inverted head and shoulders pattern at this point which has a neckline at this point, and we said that the neckline is yet to be broken to the upside, right? However, should price break to the upside of this neckline, we would wait for price to head back to the neckline to test it, and at the neckline is where we would look for potential buying opportunities, right? But that's only if the neckline ever gets broken to the upside, right? Now that we're on the H4 chart, what do we see, guys? What do we see? Another thing that I see is that, remember earlier I said at this level we have a lot of liquidity at that point. As much as that's the case, we had this M structure over here, right, which had a neckline at that point. And what normally happens also when it comes to M structures is that a lot of people usually sell on the second leg of that M structure, and they place their stop losses just above that structure, right? So we can say indeed that due to the fact that we have this level over here, or this line over here which represents liquidity, we also have a lot of liquidity in the form of stop losses that are located just above this level, right? So in my humble opinion, it makes sense for why we're seeing this sharp move to the upside. Yes, we had earnings, or rather we are in earnings season, and some companies have reported some positive results, and yes, that's another reason why the market is currently moving up. But I must say, we have a lot of money trapped at that level, hence we're seeing this move to the upside, in my humble opinion. And I believe that once that money has been triggered, we will see price push further down. Another reason why I say I believe price will push further down is because we have this candlestick over here. Just bear with me. We have this candlestick over here. It is a liquidity candlestick as well, and it too tells us that the market needs to at some point head down to grab that liquidity, in my humble opinion, right? So that is it, guys, and as far as my analysis goes of UStech or NASDAQ 100. I would say wait for price to reach this level, and at this level I'd say look for potential selling opportunities. I'm not saying that you should necessarily sell once price reaches this level. I'm saying at this level is where we should be looking for potential selling opportunities, meaning that we need confluence, we need confirmation, and we need further reasons for why we should be at this point selling, right? So I hope that makes sense, and peace out, guys.